Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a great day and a great week. And I just want to wish everybody a happy new year. I hope everybody had a great holiday and a great New Year's celebration. If you're like me, you're probably glad to say goodbye to 2020 and are welcoming better days ahead in the new year. So today I just want to talk to everybody about the fourth quarter real estate market here in Tallahassee, what we saw in the fourth quarter. And we're going to look at some metrics today to basically ultimately see how we compared in the fourth quarter of 2020 compared to the fourth quarter of 2019. And then we're going to gauge how we did. And also I'm going to talk to you a little bit about just where the market stands right now and where things are going to go from here into the new year and kind of what we can expect in the rest of the year, the months to come. So we're going to talk about 7 real estate metrics we're going to look at. So the first one is going to be number of properties listed for sale. The second one is going to be number of properties sold. The third metric is going to be home prices. The fourth metric is going to be days on the market that it took for homes to sell on average. The fifth is going to be what I call the sale price to list price ratio. The fifth is going to be the distressed sales to total sales ratio. And the seventh metric is going to be the average month supply of homes, or also known as the absorption rate. So the first 4 metrics are pretty self-explanatory. When we get to metrics 5 through 7, I'll explain those in a little bit more detail and what they mean and what they mean for the housing market. So the first thing we're going to talk about is listings. Listings, also known as housing inventory, basically how many properties are for sale. So as you guys probably already know, you've heard me talk about this before, listing inventory is very low. It has been low for quite some time now, for at least a few years now, probably 3 to 4 years now. We've been on the low side. This past year in 2020, it got even lower due to people not wanting to list their homes for sale because of COVID, and also breakdowns in the supply chain last year caused new construction to slow down a little bit for a period of time last year. So that all led to a decrease, further decrease in listing inventory. So in the fourth quarter, what we saw is we had a decrease of 4%. Year over year compared to 2019, fourth quarter of 2019. So not a huge decrease, but in a time where we've already have low inventory, any decrease is really bad. So the good news is I think we can probably expect the inventory to go up this year as people's fears of COVID start to subside and as new construction ramps up. But that's where we stood in the fourth quarter, is a 4% decrease year over year. So the next metric is sales. Good news on sales. So sales went up big in the fourth quarter. We had a 16% year-over-year increase in home sales compared to the fourth quarter of 2019. It's pretty amazing when you think about it. We just went through a year of pandemic and businesses closing and local economies closing down or partially closing down. But demand for homes seemed to remain very high and in fact go up. So 16% increase is a big increase, and a lot of it I think was fueled by the super low interest rates that we saw this past year. I think interest rates towards the end of the year and now up to now are 30-year interest rate, you're looking at somewhere around 2.5 to 2.7 percent, which is incredibly low. So that I think that's what fueled it. And despite everything that's happened, buyer confidence, home buyer confidence seems pretty high. People seem pretty optimistic about the future, which is pretty amazing. But I'm grateful for it. So the next metric is home prices. So with inventory down and the number of homes sold up, you got a decrease in supply, increase in demand. Prices also went up, and they went up pretty big. We saw a 13% increase in home sales, in home prices in the fourth quarter compared to 2019, fourth quarter of 2019. So just to put that in context, kind of your average increase in home prices is about 3 to 5% annually. So at 13%, I mean, that's, 2 to 3 times as high is what is considered normal. So it's pretty amazing. And it's great news for anybody that has bought property, a year ago or more, because your home value increased big time. So that's good news. The next metric is average days on the market. So as you can imagine, average days on the market that took a home to sell went down, which makes perfect sense, because if supply is down, demand is up, it's going to make sense that homes sell quicker. So we had about a 21% decrease in the time that it took to sell a home in the fourth quarter of 2020 compared to a year earlier. So we went from it was 61 days on average it took to sell a home in Leon County in the fourth quarter of 2019, down to 48 days in the fourth quarter of 2020. So pretty sizable decrease. Again, great news if you're selling a home. So the next metric we're going to talk about is the sale price to listing price ratio. So again, you've heard me talk about this one before. So this measures what homes sold for on average compared to what homes were listed for sale on average. So for instance, if you had a home that was listed at $100,000 and it sold for $98,000, you would have a sale price to listing price ratio of 98%. So in this past quarter, it was the sale price to list price ratio was 98.16%, and that's up slightly from a year earlier when it was 97.79%. So this is an indicator. It's pretty high, which is good. It means we're in a seller's market. Not so great if you're buying a home, but if you're selling a home, it's great news. It's like I said, another indicator we're in a seller's market. And again, not surprising that this metric, this ratio went up given the increase in demand and decrease in supply. So the next metric is what I call the distressed sales to total sales ratio. This just measures how, as a percentage, what percentage of distressed sales, what is the percentage that distressed sales make up out of total sales? That's what it is. So distressed sales nowadays are you don't see them very often. They're very low in terms of, the makeup of our total sales. In the fourth quarter, distressed sales only made up 1.73% of total sales, and that's down from 2.62% a year earlier. So again, what are distressed sales? Usually they're foreclosures and short sales, but not always. It's a distress sale is really any property that sells in a situation where there's duress that forces the property to be sold, maybe quickly or below market price due to the situation. So it could be foreclosure, could be a short sale, which is basically like a pre-foreclosure. It also could be a divorce situation. It could be an estate sale. It could be a tax deed sale, anything like that. So only made up about 1.73% of total sales in the fourth quarter, which is very low. So the last metric we're going to talk about is called the average month supply of homes available for sale. Again, this is just another metric that kind of analyzes the inventory, the housing inventory. What it is, it's if you were to not list any more homes using the current demand of sales, how long would it take to sell all the existing inventory on the market? So an average month supply of homes, where you have kind of like a balanced market, is about a 6 month supply of homes. So in a market where the demand and supply of homes is fairly equal, it's about a 6 month supply. So in the fourth quarter of 2020 in Leon County, we had a 3.36 month supply of homes for sale, which is very low. It's just a little bit over half of what's considered normal or a balanced market. So, and this is down from a year ago slightly from when it was 3.48 month supply a year ago. So it was low last year too. It's even lower this year. So again, just another indicator that we have a very low supply of inventory. So anyway, so what does all this mean? For our real estate market, those are all the metrics. Basically what it means is that, in summary, our real estate market is doing good here. The demand's really high. The prices are going up, which is good. It's pretty easy to sell a home as long as the home's in pretty good shape and it's priced accordingly. It's priced according to what other properties have sold for. Your house is usually going to sell, and it's going to sell quickly in that situation. For home buyers, it's a tough market right now. You've really got to plan ahead when you're buying a home. You've got to really get familiar with the inventory, get familiar with prices, have your financing lined up, and know what you want. And when a home comes up for sale that meets your needs, you got to move on it quick, and you got to make you got to be pretty aggressive about making offers and getting offers in quick. You don't want to lowball or send low offers in this market if you're serious about getting a house. So going forward, what can we expect in the year to come? Well, I think what we're going to see, a little bit of good news on the inventory front, is that I think we're going to see inventory of homes go up. A lot of the reason the number of homes for sale went down was because people last year decided not to list their homes for sale. They didn't want people coming through their house. They didn't want to risk catching COVID from people that were in their homes, so they decided not to list. I think a lot of those people are going to come back, and they're going to list their homes for sale. Also, it seems that new construction is ramping up, so we're going to get more new homes available on the market for sale. And I think that combination of more people more resales and more new construction homes, it's going to increase our overall inventory levels. And I think probably by middle of the year, we're going to see a pretty noticeable difference. That's my guess. I think interest rates will remain low, which is good news for home buyers. So even though prices have gone up, with interest rates being so low, it makes people's monthly payments lower, and it makes buying a home more affordable, even though prices are really high right now. So I would expect interest rates to stay low throughout the year. And then, the other thing is jobs. The only way I think we're going to sustain the level of sales and prices continuing to go up is if our job market continues to improve. So we have made serious progress from where we were at maybe 6 months ago, but there's still work to go. There's still jobs we have to get back to where we were at before the pandemic. So we'll see how that plays out. We've got a new new administration, new president. We got a new Congress as well. So we'll see what happens with legislation regarding tax policy and economic regulations and other economic policy. A lot of those changes could dictate how quickly or how slowly we recover and how well the economy does going forward. So it's too early to tell what's going to happen with that right now. I think probably 2-3 months down the road we'll have a better. Next time I talk to you guys, I think we'll have a better grasp of how possible economic and tax changes will affect our economy going forward. So look out for that. But I think everything is going good. I think people have reason to be positive whether you're buying or selling. Just stay tuned, and I'll be talking to you guys in April when I do the first quarter market update. And I might do a couple videos between now and then. So just if you want to follow me, you can look me up on my Facebook page. I post there regularly, at least once a day, typically. And also, if you want to check out my videos on YouTube, just go to my YouTube channel, Bobby Nahum Real Estate. And if you guys could, just like or share this video if you like the content from today. I surely appreciate that. And of course, if you guys ever have any questions, feel free to call, text, or email me. I'd be glad to answer any questions that you have. So I hope you guys have a great start to the year and a great new year, and I will talk to y'all soon. Thanks.